Thank you very much, Fernando. Looks that we've done our job very well, and there are no questions relating to past, meaning results themselves, but obviously vast majority of questions is relating to, well, effectively three areas. One is NII, with all implications, whether we expect similar pace of repricing of assets, what do we think deposit cost will be at the end of the year, do we think the asset yield will continue to outpace the cost of deposits? Will we compete for deposits with sovereign bonds in terms of pricing? This is the first group of questions, generally about NII and NIM outlook for the next 6 months, effectively.
So maybe I will take the question, but try to place again this view for everything in order to, because some of the questions have some lack of interpretation in some areas, so just maybe trying to reinforce everything and going at the end with this part. So in terms of the Swiss francs, we are keeping our roadmap, 2,000 settlements per quarter, steady provisioning what is needed, and making the legal defense for the bank as we should. In terms of the strategy, as Fernando highlighted, we had a lot of the levers in terms of digitalization, and it's visible that all of our plans are making achievable consequences, and the most that I would highlight is the customer acquisition that we are having at the moment, and the customer acquisition is clearly one of the pillars of the strategy, connected with the new offer that we are making for the individuals in Poland and all of the new packaging of services. In terms of the credit holidays, we will go to these questions, of course, but we are already in the phase of implementing for the customers and respect what was decided, and then managing the consequences. And we will manage the consequences through the net profits that we will have in the future, that up to now we were consuming capital, and after the third quarter we will create capital in organic way, managing RWAs as we were doing already, but we will do in a more intense way. It was very visible in all the quarters up to now that we were substituting exposures in big credit to large corporate uncollateralized loans that consume a lot of capital, to or smaller exposures in SME covered also with guarantees from BGK and with the mortgage loans as well. So it's with these capital management usage, and also of course with transactions, namely securitizations, as we explained. In terms of business, as we said, we have very positive operational results with very good volumes, control of costs and efficiency. We are now reaching the moment where the results, the net results, are able to cover already the effort in Swiss francs. So it's we will have a quarter of the impact of the credit holidays, but then we will be in a positive side, already creating capital. In terms of deposits, it's clear that the reprice of the deposits, as always, is much lower than the deposits of the credits. This was also visible in the 2020 when the interest rates were cut, that the credits of of loans were immediately readjusted due to regulations and laws But and then of course the repricing of the new operations. But the deposits were taking time to be repriced, and exactly the same happened when the interest rates go up. So there is a constant readjustment of the credits, and this is very, very fast. And there is, with a delay, 2-3 months, the adjustment of the deposits. So it's obvious that the cost of deposits of the quarter cannot be an expectation of the cost of deposits for the year end. So this is a process that when we renew deposits, when there is acquiring new money and everything like that, there is a readjustment. This year was very complex, as all of you know. In the first quarter, we had a massive cash withdrawal due to the war in Ukraine, and this had a big impact. Then this money is coming back to the system in a slow pace, but is coming back. Now there is, of course, the impact of the inflation from one side, that reduces the disposable income of the consumers. There is also the usage of bonds to retail for financing the government. That is a competition for the banking deposits as well. And there was also this I would say this delay in terms of the repricing. We are seeing still a good dynamics in deposits of corporate, some slowdown in growth in deposits of individuals. And so we would say that we should expect the cost of deposits much higher than what they are today. Still, of course, in a very positive trend, because even if we need to pay more to deposits versus the WIBOR at the moment, the space to have a profitable business in deposits is still very big.
Fernando, would you like to add any comments on NII?
No, we are not going to enter into specific guidance about how much NII is going to grow in each of the quarters, because obviously we are in an adjusting phase of market interest rates. As it was said, we are also adjusting gradually the interest rate on the deposits. So, of course, in general terms, we expect still improvement of NII in the third quarter versus the second quarter, because the trend is still positive. But obviously there is going to be a moment where the repricing of the deposits will also be more and more visible, and also because of interest rates tend to stabilize, we will be finishing the process of repricing of loans. As even you see that the market rates now somehow stabilized in recent days or weeks, so also reflecting a change in the expectations of further increases of interest rates in Poland. So while we have now the intervention rate at 6.5%, the market is anticipating that the interest rates will peak at 7.25. So it means that, and even this is not certain, so it shows that we are probably reaching the end of the cycle of interest rate increases. And obviously there is going to be a moment where the loan portfolio is already fully repriced, while deposits will still be under repricing. But still, in the next few months, we still expect to have still a positive trend in terms of NII, and of course adjusting also to the market environment in terms of competition for the deposits. Thank
you. I hope this is a satisfactory answer, that we cannot go into too many details for obvious reasons. The other area of interest to our viewers is cost of risk. In general, the questions were whether, given the pessimistic macro outlook, we are preparing for deterioration of asset quality, and whether we expect cost of risk to pick up, and what's the latest guidance on cost of risk in 2022.
So, of course, we have been saying that we have been benefiting from relatively low cost of credit risk, and once again, this was repeated in the second quarter, of course, with the support of the sale of NPLs that I already mentioned, but also. And of course, we anticipate that with the higher interest rate environment and also with the higher inflation, that we in the future may have some deterioration of some loans, but which would increase the cost of risk. Although the projection that we have for the second half of the year, it's still probably not higher than 50. It would bring the cost of risk for the full year still not higher than, still slightly below 50 basis points over total loans. And why we have this expectation? The first is that regarding PLN mortgage loans, of course, any potential deterioration would be offset by the usage of the credit holidays. So this obviously will limit any problems in terms of quality of the mortgage loan portfolio in PLN. Of course, we can have some cases that will go to use the borrower's support fund, which will also triggers reclassification of the loans, but still the cost of risk for PLN mortgage would remain very low. On the second important driver regarding corporate, we continue to have an excellent performance in terms of the portfolio. In fact, in the first half of the year, we have a very low default rate. In fact, the lowest in the last 4 years, and we did not have any large ticket entering into default. We continued to, and at the same time, we had good recoveries, which also of already defaulted portfolio, which also helped to keep the cost of risk for corporate at extremely low level, at around 7 basis points for the first half of 2022. So on one side, of course, we anticipate that the increase of interest rates can have some impact, but on the other side, due to a combination of other factors, we are not anticipating a significant deterioration in the cost of risk in the second half of the year versus the first half.
Thank you. And the remaining 3 areas which are of most interest to our viewers are FX related, FX mortgage related, credit holidays, and obviously recovery plans. So starting from FX, the questions were generally relating to our targeted provision level, because as one of the viewers asked, your coverage ratio of FX mortgages is close to market leaders. How likely the pace of FX provisioning decrease in the coming quarters? Others are asking if we expect similar level of provisions going forward. Pretty much this is the range of questions.
So as I mentioned during the presentation, of course, going forward, the biggest driver of the growth of the provisions will be the inflow of court cases. But still this year we still can expect a continuation of the provisioning level. we don't have a target. We will provision what is as a result of the methodology that we have implemented, which combines all the relevant aspects that should be taken into consideration when calculating the provision, namely probability of losing the cases in the court, what will be the amount of the loss in case we lose the cases in the court, and then, as I said, the number of court cases. So these are the drivers of the provisioning effort, and we do not have a specific target. Of course, as we are showing, the stock of the provisions is already relevant. It's close to 4 billion zlotys. So it already covers a substantial part of the outstanding loan portfolio. But we do not have a specific target because the drivers are those that I already mentioned. Of course, we expect that there will be a moment, if nothing changes in terms of legal environment, where we could start having lower charges per quarter. Still, we do not anticipate that this will happen in the next, that this can happen immediately, so we still need to take into consideration that we still may need to continue to have a provisioning effort not very far from the one that we have shown in recent quarters.
João, I have a question to you here. It's still within the topic of FX mortgages. It's about the rulings on remuneration for the use of capital and what our thinking is about it. And if it's going negative, do we expect an adjustment of provisions of any kind?
Yes, as Fernando said, our two main drivers for our provisioning is the number of cases and the court decisions. So a very negative decision on this area would have impact, but it would not be considerable impact in our provisioning needs. Maybe it would have an impact in future cases. That's why, in our view, the solution of settlements and reducing the existing credits that there are in portfolio is the solution to go, because when we make provisions, we are allocating an amount for future losses, but we are not solving the cases. One of the things that has been positive this year is that we made more than 100 cases already in court. So settlements, we made more than 100 settlements in people that were with us in court. So this is a new front for us. It's before that we were settling with customers that were before court cases mainly, and this is still the big numbers of these 2,000 per quarter. But this is difficult because it's also changing the operandus, modus operandi of the lawyers, our lawyers, the lawyers of the customers and everything. And the need for operationalize these is not easy, but is a new front that could be very interesting for us. So our view is that from one side, we defend the interests of the bank and with the counterclaims, with the legal protection, defending in local courts and European courts all the situation. But from another side, also making the proper provisions in order that whatever is the outcome to not have radical changes. And if you see our quarterly provisions, they tend to be very systematic, very aligned. So we don't jump, we don't make big adjustments. So this is we think this is the normal process. We hope that if things stay as they are, in a 1 year time, we will start to have not only much higher results that can absorb whatever is the Swiss franc cost, but also lower Swiss franc costs. How lower they will be, we don't know. But if we are making settlements, we are taking the the potential loans to be covered, also they become smaller. So we believe that we need to reach a level that this kind of provisions is not done in one-off, because we already understood, even by the colleagues of other places, other banks, that this does not work, because it's not possible to make one assessment, one big one-off, and it's done. Sooner or later, this comes back. But we believe that also sooner or later we will see a downtrend here. How big this downtrend will be is still a little bit earlier to say. But this variable of probability of losing is already so high that one of these days this variable starts or stops to have influence, and then it's just these new cases.
Just to remind, so we have now less than 42,000 active loan agreements. So because the portfolio is being reduced as a combination of amortizations, of conversions to zloty under the negotiation process. So we are decreasing let's say the number of contracts that can be more vulnerable for future litigation, and at the same time the stock of cases in the court also increased. So that's why there is going to be a moment where the number of, also the inflow should start to decrease. Of course, for the time being, the inflow was at the same level as the previous quarter.
Thank you very much. Next group of questions relates to credit holidays. One is actually very direct. The question goes, is there any specific reason to assume the participation rate in credit vacations to be higher than the peer average? Because we apparently provided a higher guidance.
We didn't saw any indication from the peers what would be the coverage or the usage of the credit holidays. So we gave a range that 75 to 90% in our view. Of course, maybe making the disclosure of 100%. There was a colleague from another bank that made some interviews saying about 85%. We thought that we were aligned with one thing. I'm sure, at the end of the day, the portfolios are very similar and the numbers will be the same. This I'm completely sure. So if the other colleagues will increase it or will decrease it, I don't know. But at the end of the day, we prefer to put maybe a little bit more conservative tranche in order to give the news as it was, and then if we will make it lower, it will be a good news. But it's very difficult to know. We think that in the next quarter, we would have already August and September, we will have a very good indication how this percentage will go through all the period. Now is just guessing.
There was also an unobvious question, which is, what will be the impact of credit holidays on your LCR ratio? Which is somewhat puzzling, but I don't know if there is going to be any impact at all. Okay, so we think there's going to be no impact. And other questions are relating to correspondence between the basis points impact that we provided in the presentation and in the financial statements, but I think we can take them offline because they're fairly straightforward. There's no point to...
I think just to be clear, I think today in our financial report, we tried to present the range of the capital ratio versus the minimum that corresponds to the range 75 to 90% of impact, so that market knows what is the potential gap that exists for this range. The final number is still not decided. It will be booked in the third quarter. But these numbers that we announced today are a direct correspondence to the 75 to 90% potential impact of the credit holidays.
Thank you. And the final big block of questions relates to the recovery plan. I mean, in essence, our viewers would like to know what is, I mean, how it is indeed to be in. What are the consequences, implications? What's the time frame? How long do we think it will take before our ratios will recover to minimum required? What comfort buffer are we aiming at? How long we will be in the recovery plan? What initiatives are we going to undertake? What are the implications for the bank? Any other, uncomfortable issues such as remuneration? What are the consequences of not meeting the MREL requirement? And lastly, why we did not go for the Tier 1 capital increase, which is a very straightforward.
So I will start. So first we have a plan. We have a plan of rebuilding capital ratios, of course, in the shortest period possible, but also in a sustainable way. We highlighted the type of drivers that will contribute to improve our capital ratios. One, continuation of improvement of operational profitability, especially the capacity of the bank to generate ongoing positive results after the third quarter, even after the impact of the FX mortgage further provisioning, and this is one element. The second is the management of the consumption of capital, especially through capital discipline, trying to have loan growth in areas that are less capital intensive, and second, optimizing the risk-weighted assets, especially through loan securitizations, of which the first one was completed in the beginning of March this year, as we announced in the end of the first quarter. So this is the plan that we have, and that we will be executing in order to reach in a comfortable way and in a sustainable way capital ratios clearly above the minimums. There are other elements which can or not help in the future, namely continuation or not of the reduction of the Pillar 2 buffer that we have in recent years. As you may remember, this requirement has gradually going down. So also it means that in the future can also contribute to the decrease of the overall capital requirements. So but again, this is outside of our control. This is depends from the regulator. But in what depends from us, we have a clear plan. Of course, I will not disclose the concrete transactions that we are planning to execute, but they are structured in a reasonable time that would allow us to reach improvement. But the most important and also important component is this capacity to generate results. Also, in terms of the MREL requirements, just to deal with that part, we have been prepared to issue already for several months, but there have been no conditions to issue either locally or internationally, especially after the war started in the end of February. The market still remains closed for the type of transactions that we need to do, especially for issuers from this part of Europe. And again, the MREL potential gap is also depends on existence or not of a capital gap, and so that's why we are focused now in rebuilding the capital that is destroyed by the implementation of these credit holidays, and at the same time keeping all options open in case the markets reopen for potential issuance of bonds locally or internationally. If this Pillar 2 buffer in the future will decrease, also needs to be reminded that as a consequence, the MREL requirement would also be reduced in the future versus the current level.
Majority of you already covered Bank Millennium for a long time, so you know a little bit how we think. So it's before, of course, we were, when there was this effort to Swiss francs, we had the first phase that we were trying to solve the problem as much as possible, trying to not have as a negative results. When it starts to be negative results, we started to solve as fast as possible, preserving the capital. It's important also to understand that the recovery plan is something that the banks need to approve with the regulator and update it. So it's something that can be deployed, and can be deployed by capital, by liquidity, or even by profitability. And even when we had losses, for us was very obvious that we would have a turning point, that is the point that we have at the moment, that the bank is able to generate results to cover even the Swiss franc effort. Now, we had this new one-off big cost of the credit holidays. These make the breakage of the capital ratios. So the best solution for the bank is to launch the recovery plan and get all the benefits of the recovery plan in terms of roadmap that we can have, in terms of savings that we can have. So we launch the recovery plan. Our view in terms of the contribution to rebuild the capital ratios, it's very clear. So the first level and the biggest contribution is in terms of net profits, and by that generating capital. Then, of course, is transactions, securitization. There is now in the market also transactions in terms of insuring credit portfolios from large corporate. So studying all of these solutions, we already made one. We have more in pipeline. So to do this, we can consider other transactions as well that it's possible to be done in the bank. So it's fine. Also, we will have, if we do not have an improvement as fast as we are planning and as we are foreseeing, we can go to a more radical management of RWAs. So it's up to now, we are more or less converting credit. So every time that we reduce the exposure of a large corporate, we fulfill these with the SMEs exposures and everything like that. So we can be in a more dramatic management on this part. And of course, there is even a question about disposable of assets. So this is a kind of a backup plan. If anything works, we can consider. The only thing that we are not considering is the capital increase. So we are not considering in any moment a capital increase. So we would need to have a completely different change of environment that we are not foreseeing at all. It could be from the war, could be from dramatic changes in the legal frame in Poland. I'm not even imagine what scenario this deployed. So there is several questions about this, why we didn't do it or not do it, because we don't consider as a good solution for the stakeholders. If you remember well, also we did the Eurobank transaction without asking for a capital increase. So we did it self-capitalized, self-financed, and we did it, and it went very well. And so we think that the best solution for all stakeholders is the plan that we have at the moment. We are quite confident on the plan. We think that in a fast pace, we will be at a higher level in terms of the ratios, or in this comfortable level that we are saying. And that's it, I think.
Thank you. And also a bit
no, just about, there was a question of remuneration and everything, because I saw that a lot of people were concerned about this. So in our view, it's very clear. So the management board will be aligned with the downside for the shareholders. The normal population of the bank have zero impact. The discussion is a little bit the risk takers of the bank. We think that there is grounds to not have a reduction in terms of the risk takers, because the reductions that are foreseen in the law are connected with their contribution to the risk that the bank is having. And truly, the risk come from the Parliament and from the changes in regulation, so it would be difficult to find responsibility inside of the risk takers of the bank. So we are aligned for that, and we think that we will do whatever in terms of regulations are needed, but of course at a higher level in terms of the board, the pain will be felt, and this we know.
And also to summarize this subject, I mean, maybe in some instances we were not as specific in our answers as you would like us to be, but also remember that recovery plans are confidential, and we're not allowed to disclose details. Needless to say that we are in the dialogue with the regulator, and the regulator would be happy to at this stage, if at all, to reveal more details. So unfortunately, we have to limit our openness to this level, at least for the time being. Thank you very much. It's 3 o'clock.
I think because there was also some question about some expectations about how much time it takes to bring the capital ratios above the minimum. We don't, again, as Darius just mentioned, of course we will have also some interaction regarding all the measures that we are implementing. We don't want, and also the plan that we have partially depends also on the market conditions, and so that's why we cannot be completely assertive regarding a specific date, but in our view, we will bring back the capital ratios above the minimum requirements during 2023. So, this is the time horizon that we are talking about. We are not speaking about 2024 or 2025. This is our current belief, is that with the actions that we are planning, that we already somehow described, the drivers, we will bring back in a clear way the capital ratios of the bank above the minimum requirements during the year 2023.
And I think what is also clear is that we will most likely remain in the recovery program for longer than it will take us to improve our capital ratios. That's the nature of the...
Because it's a separate thing.
Exactly. So that's the nature of the scheme. Okay, so past 3, we already reached the 1 hour limit that we assigned for this call. Gentlemen, thank you very much for your answer. João, would you like to make any closing remarks? Make wishes of holidays to our viewers.
Yes, so I wish that in the next quarter we will bring the large impact, but we hope that also better prospects. So it's a good time with the holidays, although it's raining heavily in Warsaw, but summer sometimes is like that here. But we wish good rest for all the analysts that are covering us, and we are foreseeing a difficult third quarter with the impact of the credit holidays, but a bright following quarters with a clear performance in terms of operational results, and with starting to see a clear reduction of the costs of these legacy problems that we are talking about.
Okay, thank you very much, gentlemen. Thank you to all the viewers who participated in the call. As usual, the IR department is at your service. We'll try to come back with specific questions to a very specific answers to a very detailed questions. Happy holidays, all the best, and see you in February. Thank you very much.